We are in a really strange financial moment, right? A lot of smart people are warning that a systematic crisis could be just around the corner. So today, we're going to dig into why gold seems to be making a huge comeback as maybe the most important asset to understand right now. Let's get into it.
So, let me just start by asking you a question, point blank. Take a look at your own investments. Is your portfolio actually ready for the kind of shocks we're seeing in 2025? And that's a serious question, because the financial world we're living in, well, it's anything but normal.
To really get what's going on, we have to look at the storm clouds that are gathering on the economic horizon. And these aren't just small, passing showers. We're talking about deep, systemic threats.
Now the thing is, these threats aren't happening in a bubble. They're all feeding off each other. We've got record global debt. The US debt to GDP ratio is over 120%. At the very same time, trust in our currencies is getting worn down, partly because of political interference. So you throw in rising geopolitical tensions and inflation that just won't go away, and you've got yourself a pretty powerful recipe for instability.
So why is this moment so uniquely fragile? What makes it different this time? There are a couple of key ideas that really explain why the cracks in the financial system are starting to look more like giant fissures. Let's break them down.
The first concept is this thing called late cycle fragility. Okay, think of the economy like an engine that's been redlining for years. Now it's starting to overheat. Debt is sky high. The tools that policymakers used to use to fix problems, well, they're pretty much maxed out. And that makes the whole system way more vulnerable to a sudden breakdown.
The second huge trend is de-dollarization. For decades, the US dollar has been the king, the world's go-to currency. But that's changing. Major countries around the world are actively trying to depend on it less. Why? Well, they're looking for stability and a little more independence from US policy. And how are they doing it? By buying alternative assets, namely gold.
And look, this isn't just a theory. You can see it in the numbers. It is happening right now. In just the first 6 months of 2025, central banks bought a staggering 410 metric tons of gold. That is a massive, coordinated pivot away from the dollar and into a real, tangible asset.
And as the source material points out, this level of buying is a signal of a real structural shift. It's way more than just diversification. For a lot of these central banks, their gold reserves are now bigger than their euro reserves. That's a fundamental change in the global financial pecking order.
Okay, so we've pretty clearly identified the problem. Now let's talk about the solution. This is hardly the first time the world's faced a crisis, and if you look at history, it shows that in these turbulent times, gold has pretty much always acted as the ultimate financial lifeboat. Let's just rewind the clock to the 2008 global financial crisis. The stock market, right, the S&P 500, it got crushed, down 38%. It was a total bloodbath for most investors. But what did gold do? It soared by 25%. It didn't just tread water, it thrived. Now fast forward to a more recent shock. That sharp, crazy COVID crash back in 2020. Stocks took a big, quick hit. And gold? You guessed it, it posted another 25% gain that year, acting like a powerful stabilizer when literally everything else felt like it was falling apart. The pattern here is, well, it's incredibly consistent. Now some of you might be saying, okay, but what about newer assets like crypto? Well, the source material frames this perfectly as the difference between a lifeboat and a raft. Gold is the lifeboat. It's got intrinsic value, a proven track record that goes back centuries, and no counterparty risk. Crypto, on the other hand, is a bit more like a raft. Yeah, it floats, but it's super volatile, it's facing all sorts of regulatory questions, and it's totally unproven in a real long-term systemic crisis.
So, that historical background is absolutely crucial. But what makes the case for gold so powerful right now are the signals we're seeing in real time here in 2025. And here is the big one, the headline number. Year to date, gold is already up 30%. It's blown past $3,300 an ounce. This is not some slow, sleepy asset anymore. The market is actively and very aggressively repricing gold for all the risks we've just been talking about.
This table, right here, this ties it all together beautifully. Every single threat we've discussed points directly to why gold is so relevant. You've got late cycle fragility. Gold is your non-government controlled safe haven. Stubborn inflation, it protects your purchasing power. That massive central bank buying, that creates a structural floor under the price. And with political risk on the rise, it's the ultimate hedge. The most important thing to see here is that all the signals are pointing in the exact same direction.
Okay, so this all makes sense on a big macro level.
But what does it mean for you, for the individual investor? Let's bring this home and talk about the practical takeaway. How can you actually use this information?
The core recommendation that comes out of the research is a strategic allocation of about 5 to 10% of your portfolio to gold. See, this isn't about going all in or betting the farm. It's about adding a powerful anchor that can both preserve your wealth in a downturn and give you significant growth potential as all these risks play out.
And you know, getting that exposure is a lot more straightforward than you might think. You don't have to go buy physical gold bars and hide them in a vault. For most people, gold ETFs are perfect. They trade just like a stock and are a super simple way to track the price. And if you're looking for a little more juice, gold mining stocks are another great option.
So let's just bring it all together. The key takeaway, the one thing to remember, is this. Gold's role is changing. It's no longer just a simple insurance policy you buy and hope you never have to use. In today's late-cycle world, it is becoming a core strategic asset, an essential tool for navigating the messy financial storms that might be ahead.
And that leaves us with one final thought. The data, the history, it all suggests that another crisis isn't really a matter of if, but when. So the question you have to ask yourself is this: when it arrives, what is going to anchor your wealth?